Hey there, everyone. Welcome to Chart This with Dave Keller. Happy Thursday, June 5th. My name is Dave Keller. I'm the founder of Market Misbehavior. It's a pleasure to bring you this daily market recap show. We're coming to you live from a beautiful, sunny, and just kind of comfortable, highs in the low 70s, Redmond, Washington. Quick update on the rooster situation. I have evicted them from our fenced-in backyard. I'm not sure how they came through, but I'm pretty sure it's through a hole in the fence that a bear created a couple years ago. So that's an issue I'm remembering that I need to take care of. I have gotten them out there, and then I came back from dropping off lunch for my wife, and the roosters are right there in front of the garage. So they're threatening. They're sort of surrounding the space, but for now we are keeping them away. It's going to be exciting to see how this comes on. I don't know if this is a good sign of what's to come. At least it wasn't a bear breaking into our backyard, but a couple of roosters. But I'll keep you updated for sure. On that note, let's talk about the market here today. I mean, the lesson is don't be a billionaire getting in an argument with the president. As far as I can tell, it doesn't seem to be going well for anybody. Don't be on either side of that one, to be honest with you, because markets are dropping. Tesla's leading the way lower. Breadth not particularly encouraging today. Most sectors down, but led by Tesla and others. A fascinating time to be an investor, to be sure. At the end of the day, with all of these, I guess, aggressive social media posts, is how I would call it, in what I can best describe as poor elementary school playground behavior. I feel like the way people are all talking to each other, I would scold my 9-year-old son for using a similar approach to interpersonal communication, but that's just me. Having said that, what do we do with this information? I think you focus on the charts, you focus on price action, right? As much as there's optimism or pessimism, if investors get anxious, get excited, get optimistic, get pessimistic, we'll see that reflected in sentiment data. We'll see that reflected in breadth data. We'll see that reflected in momentum and how things are moving around. We'll see that reflected in leadership. When you see what's working and what's not, you'll see that reflected in intermarket analysis when certain assets like bonds start to do well or poorly. So as much as it feels like we need to get in the job of predicting what headline's going to come next, I don't think you need to. I don't think you've ever really had to do that, right? At the end of the day, we've got a bunch of information coming to us from the markets. If we can understand how investors are thinking about these markets, what sort of optimism or pessimism is developing about companies' abilities to grow earnings going forward, then we're generally going to be on the right side of things. It doesn't mean day to day it's not going to be pretty exciting watching these moves evolve. So with that in mind, let's get to the market recap here. So here's what's happened today, right? And the market actually opened a little bit lower, moved higher right around noon Eastern. We made the high of the day. Probably just a coincidence, but we hit almost exactly to the penny at 6,000 on the S&P 500, and that was the high watermark for the day. From then on, the market started to move lower in a clear downtrend pattern of lower highs and lower lows. This is one of those days where it's kind of like a sporting event, call it a football game or soccer match or whatever, and you're just clearing for the whistle. You're just cheering for the whistle to be blown for the end of the period, right? You just need to get the team off the field because it's not going well. And no matter how much time you have left, it's just not going to go well. And you just need to sort of either end the game or get to halftime, get to the locker room, kind of reset and come up with a better strategy. And this is one of those times when it feels like the market was going to keep going down until the 4 p.m. bell was rung. It finally was. And by that close, the S&P down about 0.5%. 59.39 will be the official close with a couple pennies beyond that. And again, that's down from 6,000 as the peak for the day. The NASDAQ composite down a little bit more, 0.8% to the downside. Mid caps and small caps actually did a lot better. Mids and smalls actually ended up flat for the day. Still quite volatile. Still sold off going into the afternoon, but held up a little bit better. The VIX moving higher, almost a full point higher. Now it's still around 18.5, so not a high volatility signal just yet. So as much as there was chop and noise and a lot of information flowing around, the market really didn't sell off a ton, and volatility really didn't increase a lot. Now we'll see what happens as we all digest what all we heard today in terms of U.S.-China relations, in terms of Trump-Musk relations, I guess is what we'll call that. I'm not sure. But we'll see what sort of ripple effects happen over time. This happens a lot, right? When you have a big news event, when the market is open, when things are happening, unfolding real time, and you see the market's reaction, then you kind of get a chance to sleep on it and figure out what might happen next. So we'll see what happens on Friday session for sure. But for now, limited downside for the markets themselves. Certain stocks obviously dropping pretty meaningfully today, and we'll get to some of those later. Interest rates overall ended up drifting higher today. If you look at the 10-year point, we're pushing right up to 4.4%. The long bond yield is just below 4.9%. The TLT, which is a bond ETF that we like to track, basically flat for the day, just 6 cents above yesterday's close. So, basically bonds opened up a lot higher, but then really gave back those early gains, ended up being unchanged for the day. The dollar index, again, opened a lot lower. This is looking at the UUP, which is a bullish dollar ETF, kind of came back to the zero level. So sort of an initial reaction out of the open, we kind of settled into a flat move for bonds and for the dollar. Looking at the commodity space, the DBC was up about 0.5%. Now that's usually driven by energy more than anything. You see crude oil prices a little bit higher. Silver and gold actually diverged today. Gold, the GLD was down about 0.5%. The silver ETF, the SLV, was up 3.5%. We've talked about that silver to gold, silver and gold, the two charts. I mentioned that earlier in the week, the silver to gold ratio, talking about how silver had been pretty undervalued relative to gold. And we can see that that's really starting to rotate back higher. Both of those charts, I would argue, are pretty constructive charts right about now. But compared to one another, gold certainly a little bit more extended in terms of their returns. And so silver certainly having sort of a kind of a positive catch-up moment today here. Let's look at the crypto space. Not great. And while equities were sort of holding stable, cryptocurrency is sort of accelerating to the downside. You can see all 10 of the top coins in bright red. I was running out of time to look at all the different headlines and news flow coming out today, but you have an IPO today, right? We've got the Circle IPO. Went pretty well. I mean, the stock was up significantly, kind of came down a little bit. And I read something on CoinDesk actually comparing this Circle IPO to Coinbase's IPO in 2021. So I put a couple charts together just to kind of show you what maybe a historical reference. I can't guarantee that it's going to follow a similar path, but basically when Coinbase IPO'd, it ended up being pretty much a peak for Bitcoin for a while. So maybe that's not a great thing that you've got Circle's IPO today. But we'll see. For what it's worth, Bitcoin's selling off pretty consistently during the equity trading session in a general risk-off move. This is pushing Bitcoin down toward 100,000, which is kind of the ultimate big round number anywhere near current levels. Ethereum down about 7%. As I mentioned, most of the top coins, actually all the top coins tracked on stock charts in the red. All right, looking at the sectors, not great, right? When you think about sector breadth, which is looking at how many sectors are up or down, 10 out of the 11 in the red today. The best performing sector, and it was just up slightly, was communication services. Real estate and industrials were the rest of the top three sectors, but those last two were basically flat for the day. On the downside, the consumer discretionary sector, XLY, driven lower by Tesla, getting absolutely taken to the woodshed today. Down 2.5% for the XLY, a lot more for Tesla. Consumer staples, number 2, down 1%. Materials, number 3, down 0.6%. Looking at the breadth data today, kind of neutral, right? You can see this reddish, kind of neutral amber color from most of the major indexes, pretty close to being negative. And you can see the breadth on the S&P was the worst, 62% decliners versus 37% advancers. On the NASDAQ. A little bit better, but still not great, kind of a 60-40 sort of ratio. On the New York Stock Exchange, however, kind of even, right? 50-50 split almost between advancers and decliners. So overall, sort of a lot of, more negative breadth here. And that's been one of the concerns we've talked about, right? Is as a developing theme, is breadth conditions not confirming the breakout, right? So you're seeing stocks like Meta break out. You're seeing semiconductors like NVIDIA and ON breaking out. But we're not seeing the benchmarks break out in a significant way, or certainly not following through. Today, sort of a pullback day. And the breadth not great, right? We're not seeing those short-term breadth readings that would suggest a lot of optimism. Something to think about here. All right, continuing on. What else do we want to talk about? I would say the Magnificent Seven. Let's certainly go there. Immediately drawn to Tesla, which ended up being down 14% today. Things like, all federal contacts being canceled. Certainly part of the issue. The EV, mandate, or the EV discount getting taken away in this latest bill. Certainly not helping the shares of Tesla, but the public disagreement between the founder of Tesla, probably the biggest issue, down 14% today. NVIDIA was the second worst, down 1.4%. Some of these things were up, though. Let's look at Netflix, up almost 1%, Microsoft up 0.8%, Amazon and Alphabet were basically flat for the day today. All right, we'll look at the market carpet. This is a heat map style visualization. Huge fan of this to just sort of make sense of where things are at. I was looking at a weekly change there, so let me change it to 1 day. And you can see it is pretty negative, or pretty neutral, I would say, overall. If you look, the general neutral average color here kind of speaks to the fact that the markets were choppy, but negative. I'm seeing a lot of red in some key names, though, right? And it wasn't the biggest names, right? Alphabet and Meta, as I mentioned, not too much movement. Broadcom was only down slightly today after making a new all-time high yesterday. NVIDIA, which is threatening new all-time highs, pulled back a bit. Microsoft, which has been making new highs this week, continuing to push higher above that summer peak from 2024. But then you have Palantir drawing down almost 8% today. AMD, which has not been the best semiconductor stock. This is one of those names that looks very different from NVIDIA, and then it's rotating higher into more of an accumulation phase, but pulling back today, down about 2.4%. Elsewhere, I'm noting, of course, the red in the discretionary sector. Tesla, we'll look at the chart here. You'll see what it's done. It's not great, right? I mean, and a big down day like that basically derails this sort of nice developing uptrend that we've experienced, right? Tesla actually bottomed out in March, made a double bottom in March and April, and then broke above that swing high. And from then, it's been a pretty decent chart, breaking above the 200-day, sort of following through this week, sort of rotating back and probably about 50% of the way back to the April low. We'll look at a Fibonacci analysis when we bring up the chart here in a little while. In the upper right corner, I'm also struck by consumer staples. Stocks like Costco, which has actually been a really good chart here for quite some time. I did the top 10 charts to watch for June 2025, end of last week with Grayson Rose from Stock Charts. And we talked, one of the names I proposed was Costco. This is a name we've talked about for a while. The big question mark for Costco is there enough positive momentum to clear those February highs? A day like today does not certainly feel like that's happening, certainly today, and certainly puts that breakout into question. Does that end up being just a huge double top formation? Possibly. But you can see a lot of the other big box retailers pulling back as well. Here's Walmart going to the downside. There's another one I was looking at. I forget if it was Target or another one. It'll come to me probably much later. Where else can we go? That's probably it for the market carpet. To be honest with you, it was kind of a neutral day, and on as I mentioned before, on days like this where the benchmarks end up kind of flat, even though obviously pretty noisy and down slightly. To be honest, when the average stock is kind of neutral, it makes the big movers to the upside or the downside almost jump off the page, and that's where I think you want to focus on, right? If the general market environment was flat to slightly negative, look for stocks that actually managed to pound out a pretty positive day, like a Morgan Stanley. Sort of looks like it's continuing that pattern of higher highs and higher lows. A day like today, up 2%, sort of reinforces that that's a good place relative to others, and holding up in the face of market deterioration. Stocks that don't roll over on days like today usually have something in there you may want to be familiar with. Gold stocks didn't do particularly good at the moment either today, right? So you have Newmont Mining that was down 1.4%. That's not bad. Some of the steel companies which surged earlier this week on the steel tariff announcements. Nucor, Steel Dynamics, both pulling down 2.5% today. It's kind of a give back day today, I would say, overall. But as always, let's focus on some of those charts holding up pretty well, right? There are, with all those names that I just mentioned pulling back, Oracle didn't even bat an eye at this pullback and is continuing to go higher. Those are the names that actually have something probably encouraging going on. All right, shall we finish looking at some charts together, and then I'll take some questions. I see plenty of questions coming in. I feel like this is one of those times in market history where probably easy to come up with questions because there's so many things going on and so many inputs to potentially try to digest and triangulate. Here with you to try to help you along the best that I can. So put questions in anywhere where you're watching the live stream on LinkedIn, YouTube, X, and Facebook. Just put a question in the comments section on any of those platforms. I can see those real time here in Redmond, Washington, as we're going through. Any of the questions we don't get to, we will put it in the mailbag. We have some really good questions already hand selected for tomorrow's show. We're looking for a couple more. So any questions you put in, we'll put in the mailbag. We'll grab a group of those to go into a little more detail with on Friday's episode. All right. So looking at the chart of the S&P 500, right? The way that we've been describing this chart, and I didn't include the stoplight chart, but that's kind of how I'm thinking of this. In an environment where you have so much noise, where you have so much, just announcements that feel like they could have dramatic impact on stocks and sectors and themes, I think it's important as ever to clearly define your risk and clearly define your targets, your potential reward, right? And it's one of the basic building blocks, or one of the basic uses of technical analysis, is to define your risk. And again, I learned technical analysis starting in mid 2000, and basically learned about charting while a lot of charts kind of looked like this, right? Looked like the S&P early 2025 to early 2000 or early 25 to sort of going into the spring months, where the market just rotated lower. And I found that the people that use technical analysis that I thought were really getting it right were the ones that were defining their risk. And when the chart said sell, or when the chart said get out, they got out, and they didn't overthink it. They didn't try to justify it. They didn't keep holding, hoping things would stop going down. They just got out of the way. And those are the ones that survived and thrived during a very challenging period, 2001, 2002 in U.S. and certainly global equity market history. So as a result, thinking about technical analysis as a way of managing risk is super central to how I approach the markets. So on a chart like this, I think of it as innocent until proven guilty. So it's up to you to define, as an investor, as a trader, with whatever time frame you're operating on, how do you define that risk, and at what level? What's that line in the sand where you decide, okay, whatever position I had on, it's no longer helping me and I need to get out of the way. And I think the market's probably providing us as clear of a line in the sand as I think we'll find, which is we have the 200-day moving average, which was gapped above in early May and then retested in late May. I think that tells you the importance of that level. And I think as long as we hold that, if we do get more of a pullback, going into next week, I think that's the key level to pay attention to. I'm also watching this gap area. If you listen to the Market Misbehavior podcast, which hopefully you do, I ask anyone that I bring on some general question about, like, what are you thinking about the markets now? What levels are standing out? How are you approaching it? If you listen, a number of people have focused on that gap, right? I mean, so many of us see that as an obvious area to focus on. And that's good, because what that means is you can expect the market to probably find some buyers there, because so many of us are identifying that as a potential area of support. But it also tells you that if the market fails to hold that, watch how quickly a market can deteriorate. Because once people realize, or once people acknowledge that level is not holding, that's when selling starts to accelerate. That's when we have sort of a waterfall decline where people just sort of panic and get out of the way. So that's why I think that area is so important. For now, what happened today, I mean, it's really not a candle pattern that I think it would be fair to describe. It looks like a number of candle patterns. It looks kind of like a bearish engulfing pattern, but it's not. It looks kind of like an evening star candle, but it's not, because the overlap isn't right and the price levels are not particularly right. But it certainly seems like it's not great, right? And that you have an up day, an indecision day, and then a down day. So while it's not a specific candle pattern, it's sort of an outside day kind of thing. If you take the previous 2 days and group it into one session and then look at today, that's kind of what it's doing. And basically an intraday reversal today. So while it doesn't have a particular label that I think I would put on there, if I'm, seeing this chart on an exam or something, it definitely doesn't seem good. And I think the question is follow through, right? Do you see additional distribution? Do you see weaker breadth conditions? That's one of the key things I'll be looking at. And I'll share with you some of the breadth charts that I'm looking at here. I mean, it's funny, as much as the market has been so strong off of the April lows, I think what we've been talking about here in recent weeks, that the dynamic of the market has shifted a little bit in the last couple of weeks, right? From early April to mid-May, this is a strong market driven by improving breadth in a lot of ways, accelerating breadth to the upside, and growth stocks in the driver's seat. And then late May, right, in the last couple of weeks, we've seen a lot of those charts stall out. And so, for every meta kind of clearly breaking above resistance and pushing higher, I don't think the S&P is as clear of a breakout now with the initial move up of, and then no follow through, right? What we talked about after Tuesday's session, which was, all right, looks like we might be breaking above and making a run towards 6,000. What do we need? We need follow through. We need another day that sort of gives you further optimism. We didn't get it yesterday. We definitely didn't get it today. This is sort of a pulling back after that initial breakout. The McClellan oscillator has actually been negative here for the last couple of weeks. And this is what I would think of as a short-term breadth indicator. It's really turning the daily advanced decline data and really the cumulative advanced decline data into a short-term oscillator, which is a brilliant way of thinking about it. And I think, the last couple of weeks, it's been below zero, which basically says the short-term breadth is more negative than positive. You're not really seeing that improvement in breadth conditions. The bull case from here, besides breaking above resistance, would be the McClellan oscillator breaking above zero. So we haven't had that confirmation. So no follow through yet, no improving breadth. Tells me to be skeptical at this point about further upside until those conditions change. Other things we're not seeing, the percent of stocks above their 50-day moving average pushed above the 75% level, which is sort of our overbought threshold as we like to think about it. That happened in mid-May as we sort of got up to this point. Now that we're retesting that mid-May high, we can see that there are less stocks above their 50 days. So from mid-May to now early June, there were 80% of the S&P members above their 50-day. Now it's down around 68%. So, it's not a horrible number yet, but it's certainly not as good, right? So when the market's going higher on strong breadth, that's good. When the market's going higher on weaker breadth, you have to start to question that. Back here at the mid-May peak, when we were last at these levels, it was about 60% of the S&P above their 200-day. Now it's slightly less than 50%. So we're getting a little bit of a kind of short-term divergence with the markets pushing higher this week, but the momentum actually rotating lower. The breadth conditions rotating lower in this case, and that's not encouraging. It kind of tells me to be skeptical of what we're seeing here. Now, what are the signals that would confirm things are getting ugly? As we mentioned, I think earlier this week, and as I'll share again, this is the chart I'll be watching. I'll probably keep this on the daily routine here with you guys until it changes, because the bullish percent index on the Nasdaq 100 basically tells you what percent of these leading growth names are in a bullish configuration according to their point and figure charts. And when it starts to break below 70%, that is often the sign that we're kind of at or near the end of a run that we've had. The run was so strong that it pushed a lot of these stocks, almost all of them, to bullish point and figure signals. But when that starts to change, that tells you, even though the market might still be holding up, a lot of those big growth names are no longer in an uptrend. And that's when you want to start to be concerned, because these are the names. This is the foundation of the market rallying higher, right? This bullish percent index went from 6% up to 85% from early April to mid-May, right? So that's how many of these names were in downtrends and then went into uptrends. So when that changes, and when they go from being in uptrends to downtrends, then you want to start to be skeptical. That's why, like here, you want to be skeptical of further downside, because the bullish percent index is improving so much. Now we're kind of seeing the opposite. How optimistic do you want to be when the bullish percent index rotates lower? I think that's something to keep in mind. Not at that sell threshold yet, but we're certainly watching it. All right, this is the AAII survey. A lot of weekly sentiment data comes out on Thursday. It's updated Wednesday into Thursday. So Thursday's show is a good time to review it. I'll spend about 10 seconds on this one. The AAII survey, almost identical. It's so close. I actually went directly to the source just to make sure it wasn't a bad data point. It's true. These were like almost identical to last week's readings. No real change And so as a result, sort of in a similar position, slightly bearish after being slightly bullish 2 weeks ago. And so I'll continue to monitor that, but no significant change. The name exposure index, which I thought I'd grabbed on here, but I apparently did not. I don't know what I did with that chart. But the name exposure index slightly lower a little bit. It had gotten above 85%, which is actually a little bit more bullish than average, but this week coming off a little bit. So we'll see no huge changes in those sentiment readings this week. We'll update next week as those numbers evolve. Cryptocurrency is coming down here, and I've got a couple charts to use to address this. Bitcoin right now, and we're using kind of spot Bitcoin right now on stock charts. You can see that what happened is we got to an all-time high here, right around 112,000 here a couple weeks ago. Now we've pulled back to an ascending 50-day moving average. Excuse me. And now that we're in a pullback, which certainly seems the current environment, what do you look for? So we initially look at three kind of general things. Right, the 50-day moving average is one that I often look at. The 38.2% retracement of the previous leg is the second thing I would look at. That's a little bit lower, just above 97,500. And then the momentum, does the RSI hold the 40 level on this pullback? For now, one of those, all three of them are holding because we're at the 50-day moving average. We're above the 38.2% level. The RSI is holding 40. I think going through the remainder of this week and into the weekend, the question is whether those things hold. And if not, that's where you probably want to be, more cautious or less optimistic about Bitcoin. I do have a decent position in Bitcoin and Bitcoin ETFs. We'll see. We start to break down through there. I might take some of that off, but overall, that's the pullback scenario. And what's happening is what's interesting is this is happening just after we've broken above the previous all-time highs from the end of last year. Now there's an IPO today with Circle Internet Group. I have this zoomed in, so we're just looking today. So trading opened in the 12 o'clock hour Eastern time, rallied very, very quickly up to an intraday high around 104, ended up closing down around $83 a share. So it was a super volatile session from the open around 69 to the intraday high at 104 to the close at 83. But here's the thing, the IPO price was actually way down below my monitor at 31, right? So we IPO'd at 31. The trading actually opened at 69. So a ton of demand for this stock out of the open. Of course, the market was, it was a pretty rough day through the afternoon, and so I think this obviously felt the weight of the general market going lower. I was looking into this a little bit and saw an article on Coinbase that I thought was pretty interesting, just reminding me of what happened on the Coinbase IPO. So this is a busy chart, and I apologize for that. So bear with me, and I'll explain what we're looking at here. The green line in the background is the chart of is the price of Bitcoin. The black bar chart is the daily chart of Coinbase, going back to the IPO here, which was in the second quarter of 2021. Moving averages, and then RSI, PPO, which we're not going to look at too much. I just want to focus on the upper panel here, just to show the relationship between Coinbase and the price of Bitcoin. Here's when Coinbase IPO'd, and if you can see it, it might be hard to see, but the IPO price was down here around like 225. I want to say 230. That's that little line that you see right here. Very similar to Circle. Coinbase actually opened trading on the first day up here in the 300s. It got up in the low 400s intraday, but then closed back down in the 300s going into the close. What happened was that Coinbase IPO was pretty much the peak for Bitcoin for another 6 months. From there, Coinbase actually undercut its IPO price, undercut the opening day, continued lower below the IPO price. And for about 4 or 5 months, it was underwater from the original IPO price before going up to another double top, which was this peak in Bitcoin around 65,000. And then that ended up leading into a pretty ugly 2022 as both Coinbase and Bitcoin rotated lower. And if you're thinking, Coinbase is differentiated from Bitcoin, it really isn't. If you look, the correlation between these two is remarkably strong. It almost looks like a moving average of itself or something, right? But you can see that Coinbase basically follows the price of Bitcoin pretty closely, with some subtle differences, to be sure. But generally speaking, they're very, very similar. And just how Bitcoin peaked in the fourth quarter of last year before rotating down and testing the 2000. Sorry, that's Coinbase that I'm looking at. made a peak in the end of 2024, pulled back to retest the 24 low before rotating higher. Bitcoin had a very similar rotation. So the bad news right now is this is what's happened. The last sort of major big Bitcoin related company IPO. Now this wasn't an IPO; it was actually a direct offering, if you remember, which was a little different. But all of a sudden, making me think, oof. The last time we had a major IPO like that ended up being the peak for Bitcoin. No guarantees. We'll see what happens, and we'll see what happens with the correlation between Circle as a stock and the price of Bitcoin. But it's worth noting a bit of a history lesson. Sometimes it's not great when one of those companies IPOs for the price of Bitcoin. All right, let's talk about Tesla. I think we have to go there. We can see Tesla actually closed down 14% and change. Might be interesting, and I meant to do this, but we'll take a look at how much today we gave back the rally off of the lows. So what I was going to do is just draw a quick Fibonacci retracement from kind of that level up to this level, right? So we actually got down to 61.8% of a retracement. We almost got exactly there today. Sort of look at that move off of the April low to where we're at, and then see how much we gave back. And look how quickly we took out these Fibonacci levels of that rally higher, for what it's worth. So obviously, we broke both moving averages. We broke the 200-day, and I think when you look at the chart of Tesla, there are general ways that you can think about moving averages, but I would say for this one, looking at the relationship between price and moving averages for a stock can be very, very helpful. Tesla's one where the 200-day moving averages has been so meaningful here in late March, here in late April, and then finally the breakout in early May. All really told the story of this recovery off of that the March and April lows. Now breaking back below the 200-day moving average isn't good. And charts like this, as we've talked about, constructive charts, right? Innocent until proven guilty. I think that's a fair way to describe Tesla up until today. So the question is, what's proven guilty, right? What would it mean for Tesla to no longer be in a constructive trend? And I would immediately say, looking at the chart, the 200-day is where I would focus. So the fact that we closed below it today is not good. That tells me it's now more guilty until proven innocent. However, let's always remember, after a significant move like this, you look for follow through. Just like we talked about with the S&P, we'll talk about the same thing here. We've now closed below the 200-day. What happens tomorrow? Do we see buyers come in? And if not, I think you need to get out of it. You need to start thinking more on the negative side. I don't own Tesla right now. If I did, I probably have taken some of it off today with the break below the 200-day moving average. We'll see. For now, we broke below the 200-day, the RSI breaking below 40. Those are all more negative moves. Let's see what happens tomorrow, and if you get that additional validation, what we call a follow-through day. Costco has been one of my favorite charts for a while, and if you think the daily chart looks pretty good, look at the weekly chart. I mean, it's just a fantastic long-term uptrend, but you always need to be looking for signs that the trend is continuing, or signs that the trend is maybe reversing. Costco is in the process of retesting its all-time high from February of this year. I think that's pretty important. So the question of my mind going into this month is there enough upside momentum to eclipse those February peaks? Today, it's looking like not particularly, right? You're seeing that pullback, not quite testing an ascending 50-day moving average, not quite today getting down to $1,000 a share, but getting right there. It's probably hard to see because we're zoomed out a bit, but if you look, I mean, this is the low from last week is exactly at $1,000 a share, and we've actually pulled right back to there. So the 50-day, that big round number, all around that point. As I think of this stock, it's a brilliant chart above that level. Below that level, it starts to look a little less brilliant, maybe okay. We start breaking the 200-day, and that's where you need to be more concerned about the sustainability of the long-term uptrend. But certainly a pullback day within an uptrend for now. Now, other names of a similar bent. This is Kroger, which is more of a grocery store name, of course, but I'm noting that Kroger is spending more and more time below the 50-day moving average. The 50-day moving average has gone from sloping upwards since summer of 2024 to now being almost dead flat this week as the price is breaking below it, as we attempted to regain it and failed. So in the short term, the chart of Kroger is looking less ideal. It's not really a good head and shoulders top or any of those kind of things, but I'm concerned that if you draw any trend lines off of the previous lows, we've probably broken them by now. The 50-day moving average, which has been a brilliant kind of uptrend indicator, has now been broken. And now I think I'm thinking more negatively and looking at the 200-day moving average as a potential area of support. But names like Kroger actually breaking support to the downside. A lot of charts to think about. And again, I think with any of these names, it's important to not get too tied into the narrative. I can tell you why I think Costco is a great company, arguably or not. But the chart doesn't care. Right? The chart doesn't care what you think about the company. The chart is going to tell you what investors are doing and what their expectations are. And that's what's going to drive the value of the price higher. Could also drive the value of the company lower. All right, let's take some questions, and I appreciate all of the questions that came in. This was a busy day question-wise as I'm trying to flip down there. Let's see. Oh man, I love this. Average Joe, thanks. It's not a question, but it's a brilliant comment. The best feature on stock charts is when you plot the chart upside down with a minus symbol before the ticker. 100% correct, and it's a beautiful thing to do, because what it does is it helps disconnect you from your bias on the chart. Right, the moment I see this chart, and the moment I know it's Kroger, and Kroger's a name I've been following and have been talking up during this uptrend phase, it's really hard to change your mind, right? And as money managers, as investors, as analysts, as strategists, as traders, once we kind of make our decision about what we think is going to happen, it's really hard for us to acknowledge and admit that we're wrong, or that something that has worked for so long is no longer working. It's really hard to do. So what do you do about that? So you can cover up the ticker, which is something we actually used to do in my Fidelity days. We would print out charts and have the tickers covered up. And we would do that just to say, don't analyze the company, analyze the chart, right? Analyze the price. Is the price good or bad? Is this a chart you would want to own? Then let's look at what these companies are and decide whether that means something. So that's something to think about. The other thing you can do is just kind of trick your brain by reversing, by flipping the script. So stock charts has the ability to invert a price series just by putting the minus sign before the chart. Optima, which is another platform I've used. I forget what it's called, but there's a setting on there where you can just invert the price scale. Other platforms may have that as well. I'm not as familiar with others or use them as often to know exactly how you would do that, but I would ask around and see if it's a possibility. The idea with the chart, with an exercise like this, does this chart look like something you'd want to buy? And if analyzing the price using indicators, you say, yeah, that's actually a pretty good chart. Then if you're looking at it right side up, then if it's something you would want to buy, then why would you not want to sell it here, right? Which is pretty much the exact opposite, right? If a flipped over chart looks really good, then the normal chart probably isn't as good as you think. But we often, when a chart has been so good and starts to roll over, we immediately try to justify why it should still be okay. There are a number of behavioral biases that plays on. I think one of them is the endowment bias, which is basically you develop an emotional attachment. Honestly, your brain does, with a particular idea, with a theme, with a stock, and it's hard for us to disconnect from that. Partly narrative bias, right? Once we sort of describe the narrative as to why Kroger is the best stock ever, when the chart's no longer there, it's really hard for us to disconnect from that narrative that we've been, so excited about sharing with ourselves, or it's been so important to us. So that's an important one. If you're looking at stocks that you own in your portfolio and you're wondering, boy, has that gone enough that I should be taking, maybe changing a position, flip it over and see if you have the opposite opinion. And if so, I think that's something to think about. I forget what we used to call that. We had a clever name for when we would flip the script. Maybe that was it. All right, what else here? And sorry, there's so many questions. I want to look through a couple of these. We'll definitely put some of these. We'll put some of these in the mailbag for sure and get to it. 3P Investor, thanks for watching as always, my friend. You said, should a double top? I don't see your earlier comment, but I'll scan through here really quick to see if I can see it. Oh, I see. You're seeing head and shoulders and double top patterns everywhere. Is there a definition for double tops in terms of the price points? Should there be a certain period between the two? Is an interval of 1 month more important than one peak? So I'll give you the quick version, and I will tell you the longer version. You need to go to the experts, to some of the great technical analysis literature. The book that you want, there are a couple that are really good on this one, but the Bible of technical analysis, as I was originally told, is Edwards and McGee, and it's called The Technical Analysis of Stock Trends. It's gone through a bunch of different editions. It is, for many, one of the first books on technical analysis that you read on my recommended reading list, which you can get to at marketmisbehavior.com/reading list. When you get down to the technical analysis section, you're definitely going to find it there. It's one of the core books of the, books to help you understand the methodologies of the technical analyst. That was a book written in the mid 20th century by some successful money managers that used technical analysis. And it really does a fantastic job of just describing price trends and what they are and what they mean. So your question was, are there specifics to it? I mean, so not really. I mean, in the book, they actually do talk about some specifics. They talk about, a lot of times we will find patterns on very short-term and very long-term timeframes. They have, some specifics in terms of the timeframes. In the modern use of technical analysis, people apply those, sort of double tops and bottoms in a lot of different frameworks. I don't think there's necessarily a right answer for that. I would say things to keep in mind. For a double top pattern to be a double top pattern, you really want symmetry between the two. So if it looks like the left peak and the right peak are very different, so one is like a sharp, reversal and the other one's like a rounder reversal, it's not as much, right? You're looking for symmetry between the two. The other thing I would say is use indicators to sort of validate what's happening on the second peak. So things like momentum, if there's weaker momentum on that second peak, that usually helps validate it. Volume in Edwards and McGee books is absolutely vital. And they would argue that on patterns like double tops and bottoms, on patterns like head and shoulders, tops and bottoms, you can't validate that pattern without looking at volume. And generally, volume should be low through the pattern or decreasing and then increasing with the move out of the pattern is the way they think of it. Last thing I would think about would be the neckline on a head and shoulders pattern. You think of the same thing with a double top. So if you have a double top, you have this, that midpoint, right? That low between the two peaks. Use that as a level of support, and breaking down through that level of support is what validates the double top pattern. Those are some of the things I would keep in mind. I would encourage you to read Edwards and McGee's book. And that's one of those books, if you have it, you should reread it. I haven't read it in too long. One of my former analysts at Fidelity, John Kolovas, who's gone on to a great, further his very good career in technical analysis, and actually the incoming president of the CMT Association. Congrats in advance, John. He would say he read that book every year, once a year, and just pick out other nuggets to think about, kind of ground himself in the best practices of technical analysis. I think that's a huge fan of that approach. All right, that'll do it for today, folks. Thanks so much for watching me here on my live stream on YouTube, Facebook, X, and LinkedIn. I appreciate the thoughtful questions. We got to some other really good ones in there, and I'd love to save some of those to go into a little more detail on our Friday episode. Make sure you check out tomorrow's episode where we'll highlight some of those great questions. Don't forget, by the way, our podcast has been heating up some really good conversations. Spoke earlier this week with Jessica Inskip, who is a really thoughtful analyst who covers retail investors for a number of years. She had some really good answers about what individual investors tend to get wrong, how they can fix that, and some great macro thoughts as well. Also, great conversation with Tom Bowley last week about all the noise and navigating through a difficult period for investors. Have a great night, everyone. And remember, it's always a good time to own good charts. Take care, folks.